This deceptively simple pattern that I warned of in my last video played out just as expected. Now the question is, where are the markets headed from here? In today's video, you might find that answer, and we're going to go over how much money someone would have to risk to become a millionaire if the market does crash 50% or more. We can see this small falling wedge pattern that's forming right near what typically is support. But the question is, will this be enough to reverse this bearish price action? And I'm not sure that it is. We might just see something like a dead cat bounce. Last week, we had an unexpected non-farm payrolls report of 5.3% plus less than 60,000 jobs created than expected. So we're seeing significant softening in the labor market, coupled with fears that AI isn't going to generate the kind of returns many investors were expecting. SPY broke back into its descending channel here pretty convincingly, and it is below all of the major moving averages on the 4-hour time frame. On the daily time frame, we're still far above the 200 simple moving average and above the 100 SMA, but we're below the 10, the 21, and the 50. I noticed that defensive equities like dividend-paying stocks far outperformed last week, and even right now, Bitcoin is selling off, both indicating a risk-off sentiment. Bonds are going up, indicating imminent rate cuts, and interest rate spreads all appear to be uninverting right now. Some firms are now pricing in a 50 basis point rate cut in September, and we could potentially even see an emergency cut if unemployment ticks up even higher than 5.3%, because the Fed has a dual mandate of stable prices and maximum employment. For a more in-depth explanation of what's going on with that, please check out Eurodollar in University's video linked up here. And when we take a look at what happened, you can definitely see that this lower support line of this big old rising wedge pattern, it got its retest and a massive rejection. That occurred on ES, the futures, SPX, and SPY. And SPY right now, based on this pattern, is targeting around 475 per share, give or take. And of course, this could take multiple weeks to months to play out. For now, we're above this baseline of the Ichimoku cloud, which also has confluence with this main support level of around 525. If this breaks, I believe we could see what they call a waterfall or a cascade event where investors scramble over each other to sell. Of course, these previous resistance lines, like for this cup and handle pattern and for this other rising wedge pattern, could actually act as support on the way down. And many CEOs, including NVIDIA's Jensen Huang and Meta's Zuckerberg, have been selling a bunch of shares. Plus, Warren Buffett with Berkshire Hathaway has been selling, and they're now sitting on a record amount of cash. Buffett is a financial genius, and his actions could indicate there are few assets that are safe to invest in right now. And when we zoom way out, we can see that this is this main support line. And if this is just the beginning of a big market crash, this could actually come down to, somewhere around 356 per share, which has confluence with this previous support level. And for a more in-depth explanation of the fundamental things that are going on in the economy and the markets, please check out Heresy Financial's video linked above. But we need to remember that markets don't ever go in straight lines, and it's never a good idea to panic. So let's take a look at a few of the most notorious stock market crashes and see how they actually played out. Here we have the dot-com bubble crash of 2001. As you can see, it wasn't a crash in terms of, it just sold straight off. This bit of a bear market lasted from around August of 2000 until October of 2002, which is about 26 months. And this was basically a 50% correction over the course of those 26 months. But there were multiple bounces in between, as you can see, multiple chances to get out. The great financial crisis of 2008 really started around October of 2007 and then lasted until around March of 2009, where we got this big island reversal. It just went straight back up. This took about 17 months to play out, and this was roughly a 57% crash. And we actually have to move over to the daily time frame to take a look at the pandemic crash of 2020. This really only lasted about from February 17th of 2020 to March 23rd of 2020. So it wasn't that long, about a month long, and this represented a 36% crash. But When we look at a bigger picture, we can see that this went on to lead to the massive rally in equities that we know so well. The market moving up is all about liquidity, and once the Fed dropped interest rates to zero and printed trillions to prop up the economy, it flooded the markets. If we go into a bad recession, we could see the Fed do the same thing again. But what if the market does crash? Using option strat, let's take a look at just how much money someone could make by buying out of the money puts if the market crashed 50%, and how much money you would have to put up to make $1 million. Right now, the market is around $530 a share, so a 50% crash from here would put the bottom around $270. Looking at the 350 leaps puts that don't expire until August of next year, let's say the market actually did bottom by August of next year. You would pay about $407 per contract at current market value and be pulling out about $8,100. That would be a 20x return. Your profit would increase even faster if implied volatility went up, which we would expect it to in a market crash. If the market crashed this much, you would only need about 123 contracts or $50,000 to become a millionaire. Now again, this is not financial advice, and I'm in no way suggesting that anyone should do this. Trading is extremely risky and you could lose it all. But what I am showing you is strictly what could happen and how options strat can be used to calculate your own theoretical values. As a thank you for over 100 subscribers and over 900 views on my last video, I'm going to be starting a new series going over all the basics of trading, from entry and exit strategies, key levels, volume, indicators, everything. It's going to be designed in such a way that once it's all done, it will be bingeable and easy to follow. I'll be releasing at least one of those videos per week. To be a good trader, you have to know what's going on with the dollar, in my opinion. We've got this possible ascending triangle pattern on this multi-year time frame. If this actually broke to the downside, this would be targeting around a dollar strength of like 50 over the course of probably multiple years. When we take into consideration the recent price action, we're actually below the Ichimoku cloud support, which could potentially now act as resistance, and also below this main previous support line that we pointed out in a previous video. And when we take a look at the dollar strength index on the monthly time frame utilizing the TTM squeeze indicator, we can see every time there were these big squeezes in volatility, we got impulsive moves. In this case, we had an impulsive shoot to the upside. Here we shot down. Here we shot up. See how we're squeezing again. So this is implying that volatility is about to break out in one direction, and this kind of seems to be indicating to the downside. An impulsive move down could have confluence with this multi-week symmetrical triangle, which is currently targeting around 98.75. And that would be usually bullish for equities, but if the reason the dollar is selling off is because of a recession, that's anything but bullish for risk on assets like equities, crypto, and commodities. Keep in mind, given everything going on in the world, especially with Israel and Iran, if we go to WAR, that has historically been bullish for the dollar as the world's reserve currency. Taking a look at the VIX on the daily, the fear index, pointed out before that the TTM squeeze was squeezing volatility on the daily time frame, and then we can see how this fired to the upside. Interestingly enough, when we throw up the Ichimoku cloud and we look at the baseline here, we can see that now the daily support is around 20, and we're above this key level of 16. If we zoom way out on the weekly time frame, we can see that for the VIX, the majority of the time, it spends its time in between around 50 and like 16. So as long as we're above this, we're actually back into the norm, and I think it's very unlikely that we're going to go back to this low volatility like we've had for over a year. And we can see that we have what's considered nested patterns. We have a megaphone pattern here inside of this much bigger megaphone pattern. We can see that this line really acted as resistance and forced this back down. But if we can break above this, this could make like a mad dash up to like 40 or higher. When we look at the 1 hour, this rising wedge pattern, this thing was targeting around 13, maybe 14, but it didn't actually fulfill its pattern target, which is more evidence that bearish patterns are now more in play than bullish patterns. If you think the market is about to have a cascade event and crash, make sure to tap that like button. But if you think this was all just a normal correction, please let me know why in the comments below. And I've covered the Mag 7 in depth in my previous videos, but I want to give a very quick update for each. Before I do, please remember to tap that subscribe and notification bell if you're loving these videos and want more. Nvidia is back inside of its descending channel here, but it's nested inside of a much larger upward looking channel here in yellow. And don't forget this big rising wedge pattern here in red. This thing is targeting, if it breaks down, around $40 a share. And you can see you've got so many daily gaps that need to be filled along the way down. For Meta on the 4-hour time frame, we're above this descending channel. We appear to have rejected off of this previous, much larger ascending channel. Now, keep in mind, this previous upper resistance of this descending channel could act as support as price comes back down to it. And just like Nvidia, Meta has some daily gaps that it absolutely will need to fill if it starts to come back down. Microsoft in the 4-hour time frame is back inside this descending channel, but it's at support. When we zoom way out, we can see that this big rising wedge pattern is still targeting around 344, and we've got a few small daily gaps to fill in. Looking at Apple, it's back above this descending channel, but if you zoom out and you see this rising wedge pattern here, this is still targeting around 205, which has confluence with this key support level. And you have to zoom way out to see it, but if this can be treated as a big rising wedge pattern, then this is targeting around 128, and we have this big daily gap that still needs to be filled. Taking a look at Tesla, we're above this descending channel here. And when we zoom way out, you can look at this symmetrical triangle pattern. It completed about 50% of its pattern target. It hit around like 138, but it would still have to get above this key resistance to continue higher and potentially reach this other pattern target of around 366, 365. Google has broken out of its descending channel, but we've still got this massive rising wedge pattern that's targeting around 124, which has confluence with this key support level. We could get a bounce on price off of this main support line around 156, but we do have multiple daily gaps to fill on the way down as well. And lastly, we've got Amazon, which broke way below its descending channel here. It could be using this main support line as support, but if that breaks, we've got this big rising wedge pattern here that's targeting around 154, which has confluence with this main support level. And of course, there's also multiple daily gaps on the way down as well. And notice how even the stocks that broke out of their descending channels are still showing bearish price action. Most stocks will be in an oversold condition right now, though, so there is the possibility of a bounce. As always, nothing I show is financial advice, and without further ado, here is today's trading rule to live by. Best of luck, cool cats.